Well, I see plenty of rising stars, and hopefully we're going to be part of helping those strategies grow. One of them is moving into markets that are less crowded in private credit. That would be Asia and Latin America. In Latin America, we have an infrastructure strategy, and in Asia we have a private credit strategy. We're also looking at impact funds as the mother of one millennial and one generation X. I'm very aware that impact funds are going to be a necessary investment strategy of the future, but they're also one that younger generations of savers who are starting to accumulate wealth are quite focused on. So impact is where you can create value and add value to the global economy in a new way. And we've also just launched a trade receivables platform, the trade receivables platform being an opportunity to bring new types of cash flows to investors, because historically these are cash flows that have been kept in the hands of banks, but they provide an incremental yield to high yield and self-liquidating assets. So lots of things going on, places where we work with banks, places where we can substitute banks, but new strategies, new markets, lots of things that will give our investors opportunities to diversify further and access new types of cash flows. So ESG is a critical factor for us and for our investors. We look at ESG both across the private platforms and the public platforms. In the public and listed securities, it's integrated ESG, so we look at ESG as a factor that is not necessarily the determinant in your decision to go forward with a certain investment, but it certainly is a heavily focused factor in terms of understanding whether or not any given equity or bond is going to outperform. We know that that's true with G, we see increasingly it's true with S, and the focus of investors on E, whether it's about coal or power, has certainly made E also a factor in corporate performance. On the private side, it's very different. And the reason for that is because in the private markets, you're really present at the negotiation, the construction of the financing. So integrating your ESG concerns into the way the financing and the covenants operate is far more specific and can be far more controlled in terms of specific measures. The most extreme version of that, which is where we're headed increasingly as well, is on the impact funds. So in impact funds, not only do we come up with very specific measures, but those measurements are audited in the beginning and looked at over the life of the deal. And I asked somebody in our impact fund about what's the difference between some of the renewable financing and impact finance, and he said, in the renewables, I view it as being you find the project and you measure the output. In impact funds, you look for the impact, you measure it, and then you look for the projects that fit it. So very focused on the impact side. And hopefully the suite of products that we can offer between the very specific ability to negotiate on the private side and the very broad ability to look at it as scrubbing data and focusing on how we're going to measure that as a factor into our corporate investing provides investors with a full gamut of opportunity. On this particular question about how women should manage their careers, I could spend probably the whole of your reel of tape. Because I feel quite passionately about it. The first thing that I would say to particularly younger women is there is no one way to do it. This whole issue that, either you have a family or you don't have a family, that you make a sacrifice, you don't make a sacrifice, there's all sorts of variations. I do think that women have to be comfortable with the fact they may be the main breadwinners, and that's a bit of a shift, but otherwise, there's no rule. In terms of the way that women should be looking and growing their careers are two things. The first is, if you think there's unconscious bias in the room, own it. If you know that somebody thinks that you're too talkative or too aggressive for a woman, just go in and say, I know I can be talkative, but fact is I read a management paper that said that it's really good to speak up, so that's what I do. So instead of feeling like you're a victim, make yourself an actor. The second thing is I think women have a tendency, most women have a tendency to map the job to their skills, and they have an idealized form of what the skills are that are required, and they say, no, I don't have those skills, and so therefore I shouldn't put my hand up. In fact, I think what we need to do more of is mapping our skills to the job. Women need to say to themselves, here's what I do well. Would that make this a more effective job? Would I deliver on the objectives in a more efficient way? Instead of saying, oh, I suspect that they want a quant, I'm not a quant, or I suspect they want somebody who's very alpha, I'm not alpha, because that's not necessarily what will make you the most effective in your role.